Something extraordinary is happening in global finance. Central banks are buying gold at levels we have not seen in half a century. And this is not an investment trend. It is a geopolitical signal. According to the World Gold Council, more than 1,000 tons were purchased in a single year. That is the highest amount ever recorded. But what makes this trend alarming is not the number. It is the timing. We are entering a period of currency competition, geopolitical tension, and declining trust in the global financial system. And gold has returned as the ultimate form of insurance. To understand this shift, we need to look at history. For decades, the US dollar dominated global trade and reserves. Countries stored dollars, not gold. But after the 2008 financial crisis and the sanctions era of the 2010s, nations realized something. Your reserves are only safe as long as another country allows them to be safe. This became clear when several countries saw their dollar assets frozen. Gold, on the other hand, cannot be frozen or blocked. It is outside the banking system. It belongs to whoever physically holds it. China understands this better than anyone. The People's Bank of China has increased its gold reserves month after month. Many analysts believe China is preparing for a future where the US dollar faces real competition. Russia's strategy is even clearer. After sanctions, Russia shifted a massive portion of its reserves into gold. Today, its central bank depends on gold to stabilize its currency. Emerging economies are acting too. Turkey, India, Poland, Kazakhstan, and several Middle Eastern nations are rapidly increasing their gold holdings. This is creating a new global pattern. Unlike previous decades, gold accumulation is no longer Western-led. The movement is coming from the East and the global South. But why now? The answer lies in the changing structure of global finance. We are entering a world of rising interest rates, high debt levels, currency weaponization, and extreme geopolitical risk. In such a world, gold becomes more than metal. It becomes sovereignty. It becomes independence. It becomes a shield against external pressure. There is also another reason. Central banks expect long-term inflation. Gold has historically protected nations during inflationary periods. It maintains purchasing power when currencies lose value. This makes it essential for countries with weakening economies. The U.S., meanwhile, still holds the world's largest gold reserves. Some analysts believe this gives America a hidden advantage. Even if the dollar weakens, large gold reserves provide long-term stability. But the rapid accumulation by other nations signals a shift in global power. The world is slowly returning to a multi-reserve system. Dollar dominance is not disappearing, but it is being challenged. Gold's reemergence proves that countries want alternatives. What does this mean for global markets? Increased volatility, more currency competition, more diversification among central banks, and a stronger long-term role for gold. For investors, this trend signals caution. When central banks buy gold, they rarely reverse the cycle quickly. This is a preparation phase, not a temporary trend. For countries, it signals anxiety about the future of the monetary system. Many nations are quietly preparing for structural shifts in trade routes, shifts in currency power, shifts in global alliances. Gold is becoming the anchor in a world losing stability, and the acceleration of reserves suggests that something larger is coming. Will gold return to the center of the global financial system? Will countries move toward a mixed reserve basket? Will new alliances form around gold-backed currencies? These questions remain open, but one thing is certain. Central banks never make moves without a reason, and when they buy this much gold, it means they see risks the public cannot yet see. Gold is more than a safe haven. It is the oldest form of trust, and trust is the foundation of the global economy. As the world becomes less predictable, gold becomes more important. This is not fear. This is preparation. Central banks are preparing for something, and the rest of the world will feel it soon. The question is not why they are buying, but what they think is coming. The data speaks clearly. The trend is accelerating. The shift is global. And the story is not over yet, because when gold moves, history moves with it. And today, history is moving fast. This is one of the biggest financial signals of our time. Nations are protecting themselves. Trust in paper systems is eroding, and a new monetary era is beginning. Gold is the message. Reserves are the warning, and the world is entering a new financial chapter. The only question now, are we ready for it?